Welcome to this month's Economic Update. I'm Sinead Rafferty, Portfolio Specialist at NAB Asset Management, and I'm joined by our Senior Economist, Bob Kinane. Welcome, Bob.
Thanks, Sinead.
Bob, after the sharp market falls that we saw in October, have we seen a subsequent rally?
We have seen a subsequent rally, but it's very selective. So if you looked at Wall Street, Wall Street's up close to 2% for November. Some of the Chinese share market indices have rallied, in particular the MSCI China Share Index is up about 7%. But against that, Europe's down, so Europe's down a couple of percent. And a similar story with Australia, down a couple of percent. So very selective performance in November.
Can you tell us a little bit more about why Europe first and then Australia have lagged other markets?
Yeah, in the case of Europe, it's quite interesting. There are some concerns about the Italian budget situation. So the new government there has promised some fiscal stimulus in terms of cutting taxes and increasing welfare benefits. And their fellow Europeans are concerned about budget discipline in Italy. So that's been a concern for the last 6 months, in essence. We've also had softer European economic activity, and that largely reflects global trade concerns. In particular, the European car industry is worried about President Trump proposing tariffs, imports into the United States, and that would have a severe impact on the European car industry. So that's weighed on European share markets in particular. In the case of Australia, what we saw in November is that we had a very sharp falls in the oil price. So the oil price was down circa 20%. And that saw the energy sector of our share market down about 9% for the month. We also saw a sharp fall in the iron ore price. So the iron ore price went from $72 per tonne down to $65 per tonne. And our metals and mining sector underperformed. It went down 5% for the month. So these factors weighed on the Australian share market.
Okay. We also saw the market change its expectations for rate hikes in the US in recent weeks. And bond yields have fallen, and we've seen the Australian dollar rise. Is that linked?
It is linked. So we've had some very soothing commentaries from the American Central Bank. These comments in terms of interest rates indicate that the central bank is only going to gradually raise interest rates. And in particular, the comment from the Fed chairman, Jerome Powell, suggested that they are close to neutral. So that suggests there is limited upside for American interest rates from here. And because of that, the Australian dollar has rallied because on a relative basis, Australia looks a little bit more attractive compared to the US prior to the central bank's comments.
Thanks for your time, Bob.
Thanks, Sinead.
And thank you for joining us.